In this problem we have for the year ended December 31st, 2019, Nelson Company's income statement showed income of $435,000 before income tax expense. To compute taxable income, the following differences were noted. Income from tax-exempt municipal bonds, depreciation deducted for tax purposes in excess of depreciation recorded on the books, proceeds received from life insurance on death of an insured employee. Then we have the corporate tax rate for 2019 of 30% and an enacted tax rate for future periods of 35%. So use this information to calculate taxable income and tax payable for tax purposes, and then prepare the income tax journal entry at the end of 2019. So we'll start out with calculating taxable income. And so let's start with that pre-tax financial income, and that was $435,000. And so then we need to look at these additional pieces of information it gave us. So if we have income from tax-exempt municipal bonds, then that's not taxed. So we need to subtract that out. Then we have this depreciation deducted for tax purposes in excess of depreciation recorded on the books. And so that's going to be deferred. So I'm going to put here additional depreciation expense minus $120,000. Then we have proceeds received from life insurance on death of an insured employee. That's not taxed. That was $100,000. Okay, and so that's all the information we have. So we can add that together to get our taxable income. And we'll just do a sum. And so we have $155,000 for our taxable income. And so that's part of what it's asking us. So let's put that in bold. And then the other part of what it's asking is what is tax payable for tax purposes. And so we can calculate that by multiplying the taxable income by that 30% tax rate. So we have $155,000 times the corporate tax rate for 2019 of 30%, and we get $46,500. I'll put that in bold as well. And so the second part of this is to prepare the income tax journal entry for the end of 2019. We're going to, again, like we had in a previous problem, we're going to have income tax expense, then we'll have income tax payable, which we just calculated, so we can just cell reference up to that $46,500. And we're also going to have the deferred tax liability that we need to account for from this depreciation in excess of the depreciation recorded on the books that was deferred. So this income tax payable, we can just reference back up to our tax payable of $46,500. For the deferred tax liability, we need to take this $120,000 that was deferred and multiply it by the future tax rate of 35%. And so that gives us a total income tax expense, oh, don't autofill that, of $88,500. I just also want to say that for your final exam, it's important that you know the cumulative effect adjustment on a change from Lifo to Fifo. So it's along the same idea of dealing with these changes. And so I just wanted to say that here. Make sure that you know how to calculate and present when there's a change from Lifo to Fifo.